Hey everyone, and welcome back to Talk Tickers. We're going to take a deep dive into nVent Electric's Q4 2024 earnings call. They had a really transformative year.
They did.
Selling off their thermal management business and going all in on electrical connections and protection. So think the stuff that powers our increasingly digital world.
Yeah, what's really interesting here is that, nVent is laser focused on these three big trends that everyone's talking about: electrification, sustainability, and digitalization. And they're not just talking the talk. They're actually putting their money where their mouth is. I mean, they're sitting on nearly $2 billion in capital ready to deploy.
Wow. Okay, so let's get into the numbers. Sales were up 9% year over year. Earnings per share jumped 7%. And they pulled in $150 million in free cash flow just in Q4.
Yeah, and that free cash flow is really key. It's basically the cash a company has left over after paying for its operations and investments. So a healthy free cash flow gives nVent a lot of flexibility. They can use it to invest in growth, buy back shares, or even pay dividends.
That's fantastic. And one thing that caught my eye was that while overall sales are up, their organic sales actually dipped slightly in Q4. Should we be worried?
I don't think so, not necessarily. Remember, they're coming off a period where distributors stocked up on inventory. So even though sales to distributors were down, sales to actual customers remain positive. It's a timing thing more than anything else.
So demand is still strong.
Yeah.
Okay, good. That's good to hear. Now let's talk about something that seems pretty strategic. nVent is actually renaming their segments. Enclosures is now systems protection, which focuses on protecting sensitive electronics and data. And electrical and fastening is now electrical connections, highlighting those essential power connections. What's the thinking there?
I think it's a really smart move. It helps investors understand exactly what nVent does and how they fit into these mega trends we keep talking about. So as our world relies more and more on data centers, power grids, and complex electrical systems, nVent's products become even more critical. They're positioning themselves as the go-to solution for protecting and connecting all of it.
And you can see this playing out in their infrastructure segment, which they expect to be their fastest growing segment in 2025. Their data solutions business, already at $600 million, grew a whopping 30% in 2024. That's liquid cooling, power distribution, enclosures for those power-hungry data centers we're all using.
Yeah, and it's not just data centers. Remember, they acquired TrackJ last year, a company that makes those control buildings you see at power plants and substations. Well, that business has more than doubled in size, thanks to aging infrastructure, the shift to renewables, and yes, the explosion of data center.
Yeah, it's like they're hitting on all cylinders. And speaking of hitting it out of the park, let's talk about innovation. nVent launched 90 new products in 2024, and they're planning to launch over 75 new products in 2025. That's a serious commitment to staying ahead of the curve.
Absolutely. That constant innovation is what's driving their differentiation in the market. They're not just selling commodities. They're offering unique solutions that are hard to replicate. And that's contributing over 2 percentage points to their sales growth.
They're bidding big on 6 core technology platforms: cable management, control buildings, equipment protection, liquid cooling, power connections, and power management. These are the areas where they see the most potential for future growth.
Yeah, and they're taking a very strategic approach. They're focusing on modularity so they can quickly adapt their products to different needs and markets. Plus, they're actively expanding their global certifications to make sure their products meet the highest standards worldwide. It's a long-term vision for global domination.
I love it. Okay, so we've talked about their growth, their innovation, but let's get back to the financials for a second. Their earnings call highlighted some pretty impressive numbers when it comes to their profitability. Segment income was up 12% year over year in Q4. And their return on sales, that's basically how much profit they make for every dollar of sales, was up 50 basis points.
Not bad, right? Not bad at all. That kind of margin expansion shows they're not just growing, they're becoming more efficient at what they do. That's especially important in a time when inflation is eating into everyone's profits.
Right. So let's break down their two main segments, starting with systems protection. Sales were up a solid 16% in Q4, even though organically they dipped just slightly. The real star here seems to be their TrackJ acquisition, which contributed a whopping 16 points to that sales growth.
Yeah, TrackJ is definitely exceeding expectations. They're seeing strong double-digit growth year over year, thanks to that huge demand for control buildings we were talking about. It's a perfect example of nVent making a smart acquisition that's paying off big time.
Yeah. And even within systems protection, we're seeing some interesting trends. Their infrastructure vertical is booming, especially in data solutions, while the industrial and commercial sectors are a bit softer. What's the story there?
Well, it's no surprise that data solutions are leading the charge. With the growth of cloud computing, AI, and everything digital, the demand for nVent's products in that space is through the roof. The industrial and commercial sectors tend to be a bit more cyclical, so they're not seeing the same explosive growth right now.
Interesting. So it seems like they're strategically positioned to ride the waves of digitalization, but they're also keeping an eye on those other sectors. Now, how about geographically? Are they seeing growth across the board?
Their systems protection segment is a bit of a mixed bag. They saw strong organic growth in Europe and Asia Pacific, but a slight decline in North America. However, overall, it's a positive picture, especially with Asia Pacific showing such strong numbers. That's where a lot of the future growth is going to be.
And what about their other segment, electrical connections? How are they doing there?
Organically, sales were flat in Q4, which isn't bad considering the overall economic climate. We see growth in the industrial and infrastructure verticals being offset by a dip on the commercial side.
That commercial slowdown is something we've noticed across a few different companies this earnings season. It's definitely something to keep an eye on. But overall, it sounds like electrical connections, while maybe not as exciting as systems protection, is still holding its own.
Exactly, and let's not forget, systems protection is the larger of the two segments, so it has a bigger impact on nVent's overall performance. Now, another thing I found really interesting in their earnings call was how they talked about their balance sheet and cash flow. Remember that $150 million in free cash flow from Q4?
Yeah.
Well, that contributed to a whopping $427 million for the entire year.
That's a serious chunk of change. What are they planning to do with all that cash?
Well, for starters, they're investing in growth. They spent $74 million on capital expenditures in 2024, which is a 13% increase from the previous year. A big chunk of that went to expanding their capacity for liquid cooling. They actually quadrupled it. That shows you how serious they are about capturing market share in that space.
That's a bold move. It sounds like they're really putting their money where their mouth is. But are they just hoarding all that cash, or are they sharing the wealth with investors?
Oh, they're definitely sharing the wealth. They returned $227 million to shareholders in 2024, including share buybacks and dividends, and they even increased their quarterly dividend by 5%. That's a good sign for investors who are looking for income.
Okay, so they're investing in growth, returning cash to shareholders, and they're sitting on nearly $2 billion in capital ready to deploy. That's a pretty enviable position to be in.
It really is. It gives them so much flexibility. They can continue to invest in organic growth, make strategic acquisitions, or even buy back more shares. The possibilities are endless.
Now let's talk about their outlook for 2025. They're forecasting sales growth of 8% to 10% with organic growth between 4% and 6%. And they're expecting earnings per share to grow even faster, somewhere between 20% and 24%. Those are some pretty ambitious targets.
Ambitious but achievable based on what we've seen so far. Remember, they're expecting acquisitions to contribute about 5 percentage points to that sales growth. So if they can execute on their M&A strategy, those numbers are definitely within reach.
And they're expecting to maintain that strong free cash flow conversion between 95% and 100%. That means almost every dollar of profit is turning into cash they can reinvest or return to shareholders. It's a really efficient business model.
It is, and they provided some additional details for those of you who like to model this stuff out. They're assuming a share count of 166 million, which factors in future buybacks, a net interest expense of about $60 million, and an adjusted tax rate of 22%. So all the pieces are there for another strong year.
You know, it's interesting when you look at the overall picture. nVent seems to be firing on all cylinders. They've got a clear strategy, they're executing well, and they're generating tons of cash. But what stood out to you the most from this earnings call?
For me, it's their focus on innovation and their ability to adapt to changing market dynamics. The way they pivoted away from thermal management and doubled down on electrical connections and protection was a bold move. And it's clearly paying off. They're not afraid to make big bets and invest in the future. And that's what I like to see in a company.
I totally agree. Now, before we wrap up, let's get to the fun part, the "This is not financial advice" segment. What's your outrageous but plausible trade idea based on this earnings call?
Okay, here's one that's a bit out there, but hear me out. What if nVent becomes the dominant player in liquid cooling solutions for AI data centers? I mean, they're already a leader in that space, and their partnership with NVIDIA is just the beginning. Imagine if they become the go-to provider for all those hyperscalers like Google, Amazon, and Microsoft.
Wow, that's a bold prediction.
Yeah.
But you know what? It's not entirely crazy. With the amount of data being generated and processed these days, the need for efficient cooling solutions is only going to grow. And nVent is perfectly positioned to capitalize on that trend.
Exactly. So here's how I'd play it. I'd buy a long-dated call option on nVent stock. That way I'd have leveraged exposure to their potential upside in the liquid cooling market.
Ooh, options.
Yeah.
Now we're talking. But remember, options are risky. You could lose your entire investment if nVent doesn't deliver.
Of course, of course. This is just a hypothetical scenario for entertainment purposes only. It's not financial advice. But hey, if my prediction comes true, the rewards could be huge.
I like the way you think. Always looking for those big wins. But seriously, folks, do your own research before making any investment decisions. We're just having some fun here, speculating on the future of nVent.
Absolutely. Now I think it's time to move on to part 3 of our deep dive, where we'll wrap things up and share some final thoughts on what we learned from nVent's earnings call.
All right, folks, we've covered a lot of ground in our deep dive into nVent Electric's Q4 2024 earnings call. We look at their financials, their strategy, and even throw out some, wild trade ideas. But what does it all mean for you, the listener? What are the key takeaways here?
Well, I think the biggest takeaway is that nVent is a company that's not afraid to transform itself to capitalize on big trends. They saw the writing on the wall with electrification, sustainability, and digitalization. And they made bold moves to position themselves as a leader in these areas.
Absolutely. Remember how they divested their thermal management business and went all in on electrical connections and protection? That was a major shift. And it's clearly paying off. They're growing, they're profitable, and they're generating tons of cash.
Right, and they're not just sitting on that cash. They're investing it wisely, both in organic growth and in strategic acquisitions like Track Day. They're also returning value to shareholders through buybacks and dividends. It's a balanced approach that should appeal to a wide range of investors.
But it's not just about the numbers, is it? I mean, what really impressed me was their commitment to innovation. Launching 90 new products in a single year is no small feat, and they're planning to do even more in 2025.
That's right. They're not resting on their laurels. They're constantly pushing the boundaries of what's possible. And that's what's driving their differentiation in the market. They're not just selling products. They're offering solutions to complex problems.
And those solutions are becoming increasingly important as our world becomes more connected and more reliant on electricity. Think about it. Everything from data centers to renewable energy to electric vehicles relies on the kind of products nVent makes.
Exactly. They're at the heart of some of the biggest trends shaping our future. And with their strong financial position and their commitment to innovation, I think they're well positioned to continue delivering value for their customers and for their investors.
So if I'm an investor listening to this deep dive, what should I be thinking? Is nVent a company I should be adding to my watch list or even my portfolio?
Well, as always, we can't give financial advice, but I think nVent is definitely a company worth taking a closer look at. They're playing in high growth markets, they're executing well, and they've got a strong management team with a clear vision for the future.
I couldn't agree more. Well, folks, that's it for our deep dive into nVent Electric. We hope you found it informative, insightful, and maybe even a little bit entertaining. Remember, keep learning, keep exploring, and always do your own research before making any investment decisions.
And thanks for joining us on Talk Tickers. We'll be back soon with another deep dive into the world of earnings calls. Until then, happy investing.